Luxury investments, real estate, art, cars. What's really worthwhile for those with a lot of money? There's a comfortable lie that almost everyone believes, that when you have a lot of money, you just buy expensive things, and that's it. The rest will take care of itself. But the truth is almost the opposite. The greater the wealth, the more dangerous poorly thought-out decisions become. Luxury, at that level, is not a reward. It's a test of financial maturity. And that's exactly where many rich people lose money while thinking they are investing. The curious thing is that true millionaires rarely talk about this in public. They know that real estate can be a trap, that art can become a silent loss, and that cars, more often than not, are emotional drains disguised as status symbols. At the same time, they also know that these same assets, when well chosen, can protect wealth, generate conscious pleasure, and even build a legacy. The paradox is simple. What impoverishes some enriches others using the same objects. Perhaps the most important question is not what to invest in, but how to think before investing. Because those who learn to see luxury as a strategy, and not as an impulse, start playing a completely different game. And throughout this content, this logic will become increasingly clear, practical, and applicable, even for those who are still far from considering themselves rich, but have already decided to think like one. Why millionaires think differently about investing and luxury. From the outside, one might imagine that millionaires invest in luxury out of vanity, but in practice, the reasoning is different. For those who have already built wealth, money ceases to be the ultimate goal and becomes a tool. Luxury at this level is not an impulse. It's the consequence of well-thought-out strategic decisions. That's where the first major turning point lies. They don't buy to appear rich. They buy because they understand the game of investing, time, and preserving wealth. From the experience of those who observe this world closely, it's clear that luxury only enters after the foundation is solid. Before thinking about exclusive properties, works of art, or rare cars, this mindset prioritizes cash flow, protection against inflation, and intelligent diversification. It's common to see ordinary people buying expensive goods to feel like winners, while the truly wealthy do the opposite. They maintain simplicity in the visible and sophistication in the invisible, where money works silently. A practical example helps to clarify. While someone buys an expensive car on credit to impress, the millionaire evaluates opportunity cost, liquidity, and portfolio impact. They ask themselves, does this protect my assets? Does this align with my long-term strategy? This way of thinking about investment and luxury doesn't arise by chance, but from learning, past mistakes, and interaction with those who have already walked this path. And it is precisely this logic that begins to separate what is worthwhile from what only seems to be, especially when we enter the world of high-end real estate. Luxury real estate, when it's an investment, and when it's just expensive ostentation. In the world of luxury investments, real estate occupies an almost sacred place, but not every expensive property is, in fact, a good investment. Experienced millionaires know that a high price doesn't necessarily mean real value. What truly matters are factors, such as rare location, scarcity, potential for continued demand, and asset protection over time. Luxury here isn't about excessive square footage. It's about context, exclusivity, and permanence. Those who think like strategists look beyond the pretty facade and stunning views. A high-end property only enters the radar when it makes sense within the bigger picture. Income generation, hedging against inflation, or serving as a solid store of value. That's why many prefer properties in global cities, historic neighborhoods, or regions with natural barriers to expansion. The reasoning is simple. What cannot be replicated tends to preserve or increase value. A practical example helps illustrate this. A gigantic apartment in an ordinary neighborhood can be a disguised liability, while a smaller, well-located property can have immediate liquidity. Millionaires often ask, "If I need to sell quickly, who will buy it?" This question dispels much of the illusion surrounding the luxury real estate market and prepares the ground for another type of asset, even more silent and subjective, one that is not built but chosen with a trained eye. Art. Art as an asset. The silent and risky game that only experts understand. In the world of luxury investments, art enters the scene discreetly, almost whispered. Unlike real estate or cars, it doesn't shout its value. It hints at it. Millionaires who invest in art know that this is a long-term game, where knowledge weighs more than money. Here, luxury isn't ostentatious displays on the wall. It's vision, curation, and the patience to let time do its work. Those who truly understand this market rarely buy based solely on personal taste. There's artist analysis, auction history, cultural relevance, and even geopolitical movements that influence prices. It's common for wealthy individuals to rely on curators, consultants, and specialized auction houses before any acquisition. The logic is clear. Without discernment, art becomes expensive. Decoration. With strategy, it becomes a sophisticated store of value. A simple example helps to illustrate the idea. While many buy famous paintings for immediate status, discerning investors seek up-and-coming artists with limited output and growing institutional recognition. It's like investing early in a promising company. The risk exists, of course, and that's why art never stands alone. It often shares space with another object of desire, one that is noisier, more emotional, and more tempting. Luxury cars. Luxury cars and supercars. Passion, status symbol, or investment? Luxury cars capture the imagination of almost everyone, including those who are already very wealthy. But for experienced millionaires, the question is never, which one is the most beautiful? But rather, does this preserve or consume wealth? The stark truth is that most cars are an expense, not an investment. Luxury in this case usually comes with emotion, pleasure, and a silent cost that few coldly calculate. Anyone who thinks like an investor knows that ordinary cars, even expensive ones, suffer significant depreciation. Insurance, maintenance, taxes, and technological obsolescence erode value rapidly. That's why, when millionaires enter this market, they do so with almost surgical precision. They seek rarity, limited editions, history, and demand among collectors. Here, luxury ceases to be transportation and becomes an emotional asset, and, in specific cases, a financial one. A practical example helps to clarify. While a luxury sedan loses value as soon as it leaves the dealership, iconic models, limited editions, or well-preserved classics can appreciate over time. Even so, those who buy them know exactly why: personal pleasure, identity, or a diversification strategy. This awareness avoids frustration and opens space for deeper reflection. After all, at the top of the financial pyramid, what truly defines whether something is worthwhile isn't just return. It's the balance between risk, pleasure, and purpose. What's really worth it? How millionaires evaluate risk, pleasure, and return. When you reach a certain level of wealth, the logic of investing shifts gears. The focus stops being how much this yields and becomes what this protects. Millionaires evaluate risk, pleasure, and return as an inseparable tripod, because they have already understood that maximizing gains without protecting capital is like playing roulette with your own history. Luxury, here, only, enters the equation if it makes sense within this silent equation. It's common to see this mindset prioritizing assets that bring emotional stability and financial predictability. A well-located property may not double in value quickly, but it protects against inflation. A work of art may not have immediate liquidity, but it holds symbolic and financial value. A rare car may not yield interest, but it delivers conscious pleasure. Nothing is bought on impulse. Everything goes through a strategic filter. In practice, this translates into simple yet powerful questions. If this loses value, will I feel uncomfortable? Or, does this asset improve my life or just my ego? These questions prevent bad decisions disguised as luxury. And when this clarity sets in, an even deeper understanding emerges, rarely discussed outside the field, that diversification isn't just financial, it's emotional too. The little-known secret: emotional and financial diversification. In the world of lure, the pinnacle of the financial game, there's an understanding rarely seen in books or headlines. Money and emotion go hand in hand, whether you like it or not. Mature millionaires know that purely rational decisions may seem intelligent on paper, but in real life they need to align with pleasure, identity, and well-being. Therefore, diversification in the world of luxury isn't just financial. It's emotional, strategic, and deeply personal. This logic explains why someone might own real estate for security, art for cultural legacy, and a special car for conscious pleasure. Each asset fulfills a different role within one's wealth and life. The mistake many people make is copying the surface of these choices without understanding the reasons behind them. Luxury without awareness becomes a burden. With intention, it becomes a tool for balance and satisfaction. A simple example helps to clarify this idea without completely closing it off. Those who buy solely for return live in constant tension. Those who buy only for pleasure live in insecurity. The truly wealthy learn to unite these two worlds with clarity and discipline. And when this understanding is formed, it becomes impossible to look at luxury investments in the same way. Because ultimately the question ceases to be what to buy, and becomes who do I become with each choice? The luxury that builds, not the luxury that consumes. After understanding how millionaires truly think about real estate, art, and cars, one thing becomes impossible to ignore. Luxury isn't about what you buy, it's about the level of awareness with which you choose. Every decision reveals whether money serves your life, or if you've become a prisoner of your own choices. And this reflection isn't just for those who already have a lot, but for anyone who wants to get there without losing their way. Now let's take an honest pause. Which financial decisions have you been making strategically, and which have been purely impulsive? What, today, drains your energy, your time, and your money, but you still call it deserved? What if, from now on, you started applying this logic of risk, pleasure, and return not only to large investments, but also to the small choices of everyday life? If this content made you think differently, don't let it die here. Watch it again, reflect on it, apply at least one idea today, and take advantage of this. Subscribe to the channel, activate notifications, and continue learning how to play the money game with more clarity, less illusion, and much more intelligence. Because information changes the mind, but application changes life.